countries that are competing for the small pool of commodities are doing exactly what we've been doing for a very long time, suppressing with leverage the commodities on the COMEX and the London Metals Association with paper, and then draining the physicals. If you were to pull up in post-production, or if you can do it now, the available silver stockpile, just Google London Metals Association silver stockpile, it'll blow your mind. It's straight down. There's only 800,000 ounces there on the LBMA right now. And there's, only 33 or 39 million right now in the registered category on COMEX. Those are the bars that are available for immediate delivery. And yet India imported 304 million ounces of silver last year. The point of it is that these countries are using the suppression with leverage on COMEX and the exchanges to drain the exchanges of all of their commodities, not just gold and silver, aluminum, zinc, those two. Aluminum, 75% of all the aluminum stockpiles at the LBMA left last year, 90% of the zinc stockpiles. On a big macro picture, the biggest money in the world, who's closest to the information, is draining the exchanges of all of their hard assets, the commodities, and using the suppression and the leverage built into the system in these exchanges to run cover for it. And the ironic thing about it is that right now, for the first time in 3 years, the availability in the retail market where I live is the best it's been in 3 years. And the premiums are the lowest it's been in 3 years. And I can't quite wrap my head around it other than to say it is a gift, because only 0.5% of the entire financial matrix in the United States, from Joe Sixpack to the Harvard Endowment Fund, has any gold allocations whatsoever. It used to be 8% in 1980, and 2.5% is the mean over the last 40 years. We go back just to the average, where with 2.5% allocation in your portfolio would represent a 5-fold increase in demand in an industry that for the last 3 years has struggled mightily to keep inventory stocked and premiums at a reasonable level. So it's a very unusual time in everything in this world. And this is no exception in our industry. What makes the dollar the world reserve currency? No one really knows. In these pictures behind me, you got Roosevelt back there, and the dollar used to be backed by gold until he confiscated it. It was still backed by gold until 1971. And so every country on the planet has had their own dollars for 50 years to buy oil. It's created a synthetic demand for the dollar. Who just joined BRICS? Oh yeah, that's right, Saudi Arabia. If we wake up one morning and you realize that on the Belt Road Initiative, the largest infrastructure project in human history, which we talked about, I'm sure, 2 years ago, every OPEC producing country is on it, all 13 of them. If you look at the Shanghai Cooperation Organization, most of these countries are there. You look at the BRICS, 7 of the 13 are in or applied already. The rest are going to. And, all it would take is for Saudi Arabia to stand arm in arm with Xi Jinping and Putin and the rest of his OPEC brothers and sisters who are on the Belt Road Initiative, who are all coalescing together, who we've been told is going to issue a commodity-backed currency. The Shanghai Cooperation Organization has told us they're going to issue a gold-backed settlement currency for the Eurasian continent, and BRICS a commodity-backed currency. What better way to roll out a distributed ledger technology digital currency like the digital yuan, which has been going on for 4 years now to the tune of 25 billion in successful trades, than to show what all of these countries, nearly 80 of them lining up to join the BRICS Plus. Forget about the past. We're going to put commodities on a distributed ledger, and everyone has equal say at the table. The presidency rotates in the BRICS nations. They already understand that. There's no one central authority. Yeah, China and Russia may be leading it, but what happens if they stand up and they say, hey guys, thanks for the memories. Really, we appreciate it. It's been great. But we've decided to open up oil sales now in the new digital yuan, or the new BRICS currency, or the Shanghai Cooperation Settlement currency, or the Chinese petro yuan, which already is settling for oil from Saudi Arabia, from Nigeria, from Iran. They're selling, and from Russia, they sell their natural gas, their coal, their oil, and they get the petro yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. Look at Turkey, our ally, who joined BRICS, bought more gold than any country in the world last year, and in the month of January continued it. They bought more gold in the month of January this year than any country on the planet. They've already applied for BRICS. How are they going to get equal footing at the table? By having gold or silver or a commodity that gives them equal footing. It's the glue that makes all of these different cultures stick together against the Western hegemony. When they all dump dollars because they no longer needed to buy oil. If you think inflation is bad now, imagine the tsunami of inflation rolling to the shores of America, because there's way more money out there around the globe than there is here in dollars, because every country has had to stockpile them to buy energy. So they come flying home and everyone dumps simultaneously. And you have hyperinflation. You have interest rates that go to the moon. What happens to stocks, bonds, and real estate as interest rates spike to the moon? It's the great reset that Klaus Schwab talks about. Last year, the S&P 500 was down 20+%, and the 10-year Treasury suffered its worst year ever, down 16%. Now, most financial advisors or pension fund administrators or 401k, they're going to do a 60-40 split between stocks and bonds, and the 40% in bonds is considered the safe haven, right? Well, that lost 16%. You see rates continue to rise. It's going to be a religious experience for people. Another year of double-digit drops. Maybe that is what wakes people up. The Fed's balance sheet in 08 or 09 was $800 billion. Now it's $9 trillion. And that over $8 trillion that went onto the Fed's balance sheet consisted primarily of two things: US treasuries and mortgage-backed securities. The purchasing of those two assets drives down interest rates. Now, interest rates should be calculated by the market, not by the central bank. That suppression of interest rates created massive distortions, illusions, misappropriations of resource and capital, created great distortions in price discovery. And you're coming from a really high place, not to mention, in terms of prices. Interestingly enough, the only things that didn't go higher were gold and silver. Why did JP Morgan a year ago pay a $920 million fine for suppressing the metals market? Maybe the suppression of the metals market has something to do with the fact that the US has been less than smart about their own metal stash, where we have exhausted our strategic stockpile of silver decades ago.